question, which is position sizing confusion. This comes from Theodore, and I'll let everybody kind of run through it and go from there. Really, at the crux of it, it's kind of trying to understand what I think he gets the fact that a gold position, it can be kind of up to a 10 to 12% position because we consider gold a currency versus a commodity. But really, it's how do you incorporate kind of multiple, I guess, exposures within an asset class, and what does that mean for the cash position, et cetera, et cetera. So at the end of the day, the max position size is for each individual exposure, right? So within that particular asset class. So if you have fixed income, for instance, might be something that we're going to be adding here soon. But like if you have IEF and then TLT, you can have both of those at a max of 10%. And so that would be a 20% exposure to fixed income. In the example that I gave last week, that was from the macro show. So if you kind of review that episode 3 again, Keith walked through having a 10% exposure to gold, GLD, a 3% position to platinum, PPLT, and a 3% position to silver, so SLV. So that would make a total kind of 16% total exposure to precious metals. So that's exactly kind of how to think about things in terms of adding again, you got to kind of incorporate, although gold is considered a foreign currency, the platinum and silver are commodities. And so, but as a total, you also want to understand that you don't have just like a 6% commodity exposure to precious metals. You have a 16% kind of overall exposure to precious metals, right? So taking it all into consideration, that's what he talked about this morning on the macro show. And I'm going to get into as well in terms of asymmetry in the portfolio. You have to understand that if, you've got 30% of your book short various ETFs of Europe, then that's going to have a much larger impact in terms of, if it's not going kind of in your favor, then that's going to, impact you and your portfolio in a more negative light than if you had, just basically, 3% exposure across, 1% small mid position sizes on 3 different, European ETFs. So again, what I'm wanting to do here as well is just kind of consider the equity exposure and kind of take that as the next example. So in our, there are 8 U.S. equity sector longs in the ETF Pro product as of this morning. If we weighted all of those at a max 6% position during, say, a quad 2 type environment, then, and again, in a quad 2 environment, you're going to get kind of VIX typically, below 19. So that's the investable bucket. And you could have kind of up to a 48% total exposure to U.S. equity. So again, that would be if we use just our current 8 longs, right? Max 6%, 48 total exposure to U.S. equity. Now you might not in reality have 6% exposure at all the time, because you're kind of incrementally touching and moving things from max to mids and to mins and et cetera, et cetera. So, but I just want to use that as a very general broad example. Now, the caveat here is during a quad 4 environment, when VIX can have very large intraday swings and typically is north of 19 and often north of 29, which is a F bucket, your max exposure to equities in general should decrease, right, to a more practical kind of risk level. Mine is 4.5% with a beta adjustment. Doesn't mean that you have to use 4.5%. I'm just giving you my example because that's what I know, and that's what I do, right? So in other words, like XLP, when we beta adjust something, right, XLP has a much lower beta. Therefore, I can actually bring that one up a little bit higher. So I can take XLP up to about a 5% max position, but something like like MSOS, so like weed ETF, or cannabis, excuse me, that is a more proper term to use, would get limited to a max of 3% position. So my min there is basically about 1 to 1.5, right, on MSOS. And then I'd kind of take it up to, really let's just use simple. So it would be 1, 2, and 3. So 1 as min, 2 as my mid, 3 as my max, right? So I'll beta adjust those positions. Now MSOS is not kind of, I'm not trying to pick on it, but there's multiple there that you kind of use, right? So silver, for instance, has a much higher beta, right, than than other commodities, and it can be a little squirrely. So maybe you don't take your max SLV position to a full 4%, and you kind of cap it at 3 or 3.5, wherever you want to do, right? But this is where, you want to kind of make sure that you're generating these rules for your own risk tolerance, and you're putting those into practice for whatever is comfortable for your own portfolio and for your own risk management. Keith, and another thing, right? So Keith currently has 14 positions, smaller than UUP in his Mucker family office. So you can see that in the re-rank product from Macro Pro. And he said yesterday that UUP was weighted at 5%. So that means every other equity or ETF that's in his portfolio there is less than a 5% total exposure. Even when he, going into, I think it was, coming into the day yesterday, he was plus 4% net long, right? So he was plus 4% net long, and still only had basically his 14 exposures at 5% or less, right? And one of those was the dollar, which he can take all the way up to kind of 10-12%. So again, I just want to use that as a real world example, because it's really important to understand that you kind of just because your max is 6%. That doesn't mean that you should take it there during a quad 4 environment when volatility is typically elevated, and things can really move around in a much faster manner. And just one other thing in terms of the Mucker family office, is not just U.S. domestic equities. It does include commodities and international equities, and it even includes gold. And so if you haven't been paying attention to the fact that it includes gold, you probably haven't been paying attention lately. But I'm not going to give away what those positions are, but just wanting to kind of use that as an example that basically everything is less than 5% or less than the dollar position. So I think that's kind of the answer there for question number 1.